Hello, everybody. I want to wish you everybody a good day. I hope everybody's having a great day. I want to bring to you guys some news that just broke today from the SEC. Proposed rules that would change which cryptocurrencies how cryptocurrencies exchange on centralized exchanges, guys. So this is a situation here that's getting ready to develop and could very well develop into a situation where centralized exchanges basically in the United States change the way that they do business. So let's kind of go through this a little bit, and we'll get to some highlights here. But um, basically, the SEC committee voted 4-1 to add cryptocurrency into its current regulation, or updated regulation about the trading and maintaining basically reserves and one-to-one assets in current crypto exchanges. Think about this like a Fidelity or a TD Ameritrade or an account like that, where yes, you're trading on Fidelity and TD Ameritrade to do your trades, but there's also a third-party custodian that actually goes out and makes your trades on the New York State Stock Exchange and holds your assets for you, so they really are backed one-to-one. So the SEC committee has voted 4-1 to roll this into cryptocurrency exchanges here in the United States. So what does that mean for cryptocurrency exchanges as they currently exist, guys? Well, the situation that we currently are under does not guarantee that your assets are backed one-to-one, and they do not have a third-party custodian, which is why the likes of FTX, Celsius, and everybody else that fell, your cryptocurrency was actually tied up in their bankruptcy. Now, if somebody like Fidelity, JP Morgan, Charles Schwab, or somebody like that had to file for bankruptcy, because they do have a third-party custodian, your cryptocurrency will not be tied up in their bankruptcy, and you will be matched dollar for dollar and receive your funds back. So this third-party custodian is very important to securing the future of trading here in the United States. So want to get to a couple points. I'm not going to read this article to you. I will link this article in the description below, because I believe that it is one of these ones that everybody should read and understand what's going on. But in this article, they talk about Coinbase themselves already having a third-party custodian. But what you will notice too is Coinbase is also traded on the New York Stock Exchange, but Coinbase already does have something similar in a third-party custodian. So they are about the closest you're going to get to a third-party custodian at this point. Right here, Coinbase already has a similar arrangement already with a third-party custodian. So Coinbase basically is set up to already capitalize off of this move. They are set up, but this does not stop exchanges like Coinbase, Gemini, Binance, or anybody else from actually being the custodian of your cryptocurrency. But what it does is it separates the actual cryptocurrency exchange from the actual holder of the cryptocurrency. You can be both, but there has to be a clear firewall in between the two. So, and Coinbase currently has it set up already to some extent, maybe not to the extent that the SEC wants it, but very close. So this is very good. So I think that this is a good proposed regulation. I think that this regulation will bring institutional money in. I think it will eliminate some of the rug pulls. It will eliminate some of the bankruptcies. It's going to eliminate some of the nonsense that's going on in crypto right now with these centralized exchanges and reserves, and making sure that your cryptocurrency is backed one-to-one. So this proposed regulation right here is the next step, and it's the evolution of cryptocurrency, I believe, with the centralized exchanges. So that being said, will all centralized exchanges make it through this? The chances are probably not. Will this current regulation, proposed regulation pass? I believe it will. I believe it has a great chance of passing and becoming law. I believe that with everything that's happened over the past 24 months, this is a very easy, to me, I call it easy, easy law to put on the books because there's evidence out there that states to that the the opposite of not doing this is not very good and very safe for customers. Just look at FTX, look at Celsius, look at Three Arrows Capital, look at all them guys. So, ultimately, what led to this current proposed legislation is actually all the players in cryptocurrency who decided to not do the right thing. But I do think that this is what um, all the institutional investors are waiting for. I think that this is why you see Fidelity already starting their cryptocurrency exchange. I think this was going to open the door to all the other brokerage firms to come into cryptocurrency and hold cryptocurrency. So I think that this is going to change the centralized exchange game. I think this is actually a good regulation. I hope it passes, actually. A lot of people may not agree with that, but I do hope it passes for the greater good of cryptocurrency and institutional money coming in. If cryptocurrency wants to get past a $3.5 to $4 trillion market cap, they're going to need institutional money to come in, and institutional money is going to come in when proposals and regulations like this continue to keep their investors safe. So, with that, guys, that's what I have for you guys today. We'll continue to monitor the situation. So go ahead, like the channel, subscribe to the channel, share this out. We'll keep you guys up to date on what's going on, and I appreciate your time. Appreciate you guys watching the video, and go ahead and, like I said, like the video, subscribe to the channel, and share it out. And guess what? All that's free, and I appreciate it. So everybody have a great night. Thank you.